Sofia, you've got to run the gauntlet.
Yeah, so all the pivots, right? I mean, I think next year will be all about, is this the year that China finally outperforms? We've been waiting for that for 2 years. Also, dollar strength obviously has a huge impact on our markets here and also EM. You know, some positivity around the tech and the hardware story is Taiwan and Korea. Are those markets going to benefit? And also, you know, this year has all been about the macro trade. If you're a macro trader, you've had a brilliant year. That's the space where, you know, money was made. So is that going to continue into next year? Are quants going to continue to do well? Or is it the year of the stock picker? I mean, those stats that more than 1,000 stocks are down, that's not a great year for the stock picker. The long-short strategies didn't do very well this year. So, you know, the question is, do fundamentals matter again? Are people going to start looking into the earnings season again?
Well, I mean, with valuations less lofty, as they say,
yes,
it is an environment for stock pickers. Well, I mean, are long funds going to be back next year in a big way? And that might be a story in China where they can take advantage of that.
Yes, and I think people are starting to look at China as kind of not just a valuation story, not just a rotation story, getting that mean reversion, and we've done, you know, that's been the trade for the third quarter. But now you're starting to get real interest in specific sectors. You know, you're seeing people actually talking about which part of the market is going to do well earnings-wise. Are we going to get growth back in tech?
They're talking about it, but are they putting their money where their mouths are?
Not yet.
That's the thing, isn't it?
Not yet,
yeah.
But also, Rich, I mean, the fourth quarter is kind of when people are closing their books for the year. You don't really want to deploy a lot of capital now. Wait until the first quarter when also we get maybe a clearer picture around the China reopening story. We still don't know whether that's good or bad for China's economy and how painful that will be in the short term. We also still don't know whether it's inflationary or deflationary for the global economy. So there's still a lot of data to be seen. So that's why I think we're getting a little bit of caution. Also, fourth quarter, I mean, liquidity is incredibly low. You also don't want to be caught on the wrong side if something like the BOJ surprises the market. So a little bit of caution around there. Close the books, you know, put the really terrible year behind us and look ahead into next year.
Yeah. And to one of your questions there, if inflation does come back because of China, I mean, that takes us into the Fed conversation. If the Fed holds rates where they currently are, or if not higher, of course, into May, is that an environment where, you know, the Chinese equity complex can actually do well and do well in if the macro picture is as bleak? Because also all the rate hikes this year hit next year.
It's a really complicated scenario, actually. And it's, you know, if you talk to anyone in New York and they're looking at the China reopening story, the first question they ask is, what does this mean for my portfolio? What does this mean for inflation? And how will this impact the Fed? And it's complicated because it also impacts just the flow of global capital. And the BOJ kind of just threw another wrench into that. You know, where is capital going to go? Is China going to start sucking in that capital if it is the only major economy that is easing? Or, you know, is the rate differential going to be so that divergence is going to be so wide that people are not going to want to have yuan-denominated assets? You know, I think it's a very complicated because this has never happened before.
That's right.
Right. So, and also the pace of the China slowdown, we don't know. You know, Bloomberg Economics is forecasting 5.1% GDP growth. Very, very low base, of course, this year. But if China is growing at that pace and we're seeing recession in the US and in Europe, then, you know, that is the positive story that everyone's going to want to trade. But again, what does this mean for the Fed and what does this mean for the PBOC?